Well, howdy there, folks. Cathie Wood. So I just got to see a little clip of this, let's call it interview type thing that happened on Bloomberg here today, okay? And I got to see like a 2 or 3 minute clip, and now I found the whole entire interview that's 29 minutes long. So I thought, okay, she says some really, really interesting stuff in this 2 or 3 minute little clip I saw around certain stocks that are about to crash and tank through the floor, what she thinks is going to happen with her stocks and the future there. And I know a lot of folks are invested into either the ARK fund or are looking at a lot of these stocks that Cathie Wood is in and wondering, are these opportunities? Are they about to skyrocket? Things like that. So we're going to hear kind of her perspective on all this. And I think this can be a very, very interesting chat. The other gentleman here is George or Jorge Perez, however you want to pronounce his name. $1.7 billion net worth, made his fortune from real estate. And so rather than watch this by myself, I thought, let's go ahead and watch this together. Let me react. Let me give my opinion kind of on this. So I hope you guys enjoy this as always. Make sure to subscribe to the channel if you are not already, and get ready for these Cathie Wood comments. Also, if you want 5 free stocks valued up to $3,500 each, check out the pinned comment down there from MOOMOO. MOOMOO is an up-and-coming stock brokerage right now, and it's absolutely insane. Like, you literally could deposit, I think, like $1 and still get the 5 free stocks. It's insane. So definitely take advantage of that. It's actually a pretty cool app as well, okay? And yeah, during the course of this video, it's something you'll want to check out, okay? So let's go ahead and play this, and let me react to this, okay?
Cathie Wood here is the founder and CEO of ARK Investments. Some of you may be invested in her ARK Innovation ETF or some of her other ETFs. George Perez is the founder and CEO of the Related Group, one of the longest standing real estate developers here in Miami. And Zach Dexter is the, I guess, what is your current title, Zach?
Currently CEO, FTX US Derivatives.
So he runs a crypto derivatives trading platform that was recently acquired by a firm that some of you here in Miami will know well because its name is emblazoned on the arena just down the road, FTX.
Wow. Crypto derivatives. And by the way, there's a stadium in Miami that's sponsored by Hard Rock. I was thinking, did Hard Rock require them?
Let's begin. George, as I alluded to just a moment ago, you're the OG here, right? You're the real estate developer who's been in Miami starting out with affordable housing more than 40 years ago. You are a notable patron of the arts. Folks, his name is on this building. And you're a philanthropist. You're increasingly dedicating your time to both those latter passions. Here's where I want to go. You've seen both the good times and the bad times here in Miami. Does the boom that the city is experiencing now, and that Florida, to Barry's point, is experiencing now, feel different to you?
They all feel different, right? So the great difference about this boom for Miami in particular is that it's coming from everywhere. You know, when we had the last boom in Miami, it was mostly driven in the housing market, in the real estate market, by foreign capital coming in. And now, as Barry alluded to, we're getting capital from heavy capital from the Northeast, from California, and again from South America and Europe. There's been a pent-up demand during, the pandemic that we're now seeing expressed in the cranes that you see everywhere here in Miami. So I think this is a more solid growth than we had before. I think the levels of speculation in real estate are not like before, where you put 10% down and everybody walked away from contracts. We've been very good at trying to determine
some people put a lot less than 10% down, I'll tell you that much.
Market demand and getting huge deposits before we let any type of tenant, whether it's an office tenant or a condominium tenant, come in. So we've taken steps to protect ourselves from a crash like we had 10 years ago, or a little over 10 years ago. But I always warn people that we've said this before many times. This is a paradigm change. We'll continue to grow forever. You asked a really intelligent question, and Barry, I think...
I respect that. Okay, so he's basically kind of given the thesis there on why Miami real estate won't fall. But he's, and why it's growing and those sorts of things. But he's also saying, hey, you know what? Like, we've said this, some of these things before, and we've had crashes and corrections and those sorts of things. And so I respect that.
Gave an answer that is not mine. It is with 20% rent growth, with Miami rents at $3.50 a square foot, $4 a square foot. How are the people paying for this? Because it's not like our incomes have increased so substantially in the city. And if you look at one of the greatest needs here is affordable housing. People are way, way overpaying for housing today. The percentage of rent, the percentage of income that's going into rent is huge. And that's a huge problem to me. How do we keep on renting these apartments? We've had 25% rent growth in our portfolio in South Florida, 20% in their portfolio outside of South Florida. And this is not sustainable, So at one point, we're going to see I don't think we're going to see a deep recession like we saw before, but I think we're going to see a sharp slowdown.
Zach?
Makes sense. And I mean, if you think about it, obviously Florida's my city, Nevada. Oh boy. That reminds me of It's Everyday Bro. City's London, right? My state, Nevada, obviously no state income taxes. Florida, no state income taxes. Those places are going to continue to attract people over the long term, especially now that so many people can work remote. I think Roni Ronan was kind of a game changer with companies realizing that they can use remote workers, right? And folks just realizing, hey, I don't have to live in California. I don't have to live in New York, or I don't have to live in this place or that place. I can move to places that they love the weather, right? I mean, yesterday here in Vegas, I think it was like 70, 72 degrees. The weather's amazing, right? And we're in December. And no state income taxes, it's a massive, massive thing. And I think when folks kind of realize, oh my gosh, like what some of these other places have, you go to Summerlin, you go to Henderson, out here in Nevada, right? In southern Nevada. And maybe you go to Miami and you see kind of what the lifestyle's like, and it's like, wow, and I have no state income tax? Ooh, okay. And so obviously when you have so many people realizing that all at once, they're going to come into a market, right? And you're not going to be able to build fast enough to offset that. People are going to move there way faster than you can build a high rise or build another building, right? And so naturally the rents are going to go insane. I'm 100% in agreement with them. I don't think it's sustainable over the long term, but is it sustainable over the next 1 to 2 years? Probably, unless they figure out a way to build skyscrapers in less than a year.
Until not long ago, you lived just a few blocks away from me in Brooklyn. 8 months ago, you packed your bags and you moved to Miami. What explains the broadening appeal of this city as a business and increasingly as a financial center?
Yeah, I think having the right kind of regulation is super important when you're trying to offer new financial services and products. And Miami has that in spades. It's done a really good job, and the state of Florida has done a really good job of balancing consumer protection with letting people innovate. So I think for us, because we're federally regulated, that didn't come into play so much. It was more the traditional.
Somebody in the comments, can you let me know what that expression means? They have it in spades. I'm still trying to figure out, does that mean they like graded it, or does that mean it's like kind of so-so? I actually not familiar with that expression. Thank you.
Tech narrative. Okay, we've had COVID for 2 or 3 years. We've got a bunch of people remote. Let's go somewhere where it's lower cost. We can hire people more easily. So that was the motivation for us. But I think for some of the other crypto companies that are coming down here, the right amount of regulation is something that Miami and Florida have done really, really well.
What about for young
a lot of people moving down to Puerto Rico also, by the way.
I mean, it can be more fun, especially in New York right now. It was shut down for a while, and it's sad to see. We all love it, and everyone's got to get back up there and check it out every once in a while. But I think for young people, it's the place to go if you want to work in crypto, and if you're young, you probably want to work in crypto. Or you should.
Cathie, you just moved your firm, Ark Investments, to the Florida Gulf Coast, not the Atlantic Coast. Help us understand why you chose to leave New York, and what appealed to you about St. Petersburg over Miami?
Okay, well, in late 2019, we had just hit about $10 billion in assets under management. And I began
That is a very historic figure now.
Yes, it is. And I began to challenge my team saying, I've seen a lot of asset managers get through 10 and get to 50, but there's a wasteland of managers in between that level. They're rewarded handsomely, and it seems like some of the animal spirits, I don't know what really happens. I didn't want that to happen. And so we blew right through $50 billion last year as the coronavirus.
She blew right through $50 billion with those stock losses. I'm just kidding, okay? I'm probably down just as much as her. Okay, maybe not that bad, but you still,
rewarded innovation the way that it did. But planning was in motion, and we thought of all the ways we could keep the growth going, keep the excitement growing, and enjoy life more. So we began to look outside saying, could we make a difference somewhere? I mean, we're not going to make a difference in New York City, right?
It's true.
No, we're not.
Word.
But could we move to a city where we could actually help to shape the city? And St. Pete was calling. They're putting up an innovation center there. There's also across the bridge in Tampa an innovation center. Jeff Vinnick's Embark Collective.
Just so funny, like on the East Coast, it seems like people's mentality is like, if you're gonna move to a let's call it a no tax place, you move down to Florida. If you're in the middle of the country, you move to Texas, you move to Houston, you move to Austin, you move to Fort Worth, right? Maybe San Antonio. And then if you live on the West Coast, you move to Arizona, which isn't a no-tax state, but it's like lower taxes in Arizona, or you move to, obviously, Nevada, right? It's just interesting to see kind of the mentality. You don't see as many people kind of moving, let's say, from the Northeast to certain markets. It's just, I don't know, it's just something about the mentality. It's like if you're in New York and you want to escape taxes, you go down to Florida.
And as we were going down there more often, I thought, this feels like Austin maybe 10 years ago, maybe 10, 15 years ago. And we know what innovation and technology has done for Austin in particular. And so I thought in engaging with the leaders, they were very open. They were really happy that we were thinking of St. Pete. Most businesses think of Tampa, actually. And I'm not thinking of St. Pete versus Tampa. I'm thinking of the region. I think it could become a very powerful region. And it's beautiful. And as you say, very friendly to business. I know Barry said that as well. So,
George, your heart and soul are here in Miami, but what do you think of the prospects for Tampa St. Pete's?
We are huge on Tampa and St. Pete. We have 6,000 units planned for the next 2 years in Tampa, St. Pete area. We've done everything from super luxury condominiums. We are just doing a Ritz-Carlton in Tampa on the water, and people said, you can't get $1,000 a square foot in Tampa. This is a $700 a square foot market. And we're breaking ground in 30 days, and we are 80% sold.
You can get $1,000 square foot anywhere if the project's nice enough and there's enough money in the area.
So we're making a huge bet in the Tampa, St. Petersburg area. It's one of the most diversified economies in Florida. The mayors, both mayors, the Tampa and St. Petersburg mayors are unbelievable, so pro-businesses. What can we do? They're yes cities.
Yes.
You're talking before about the here all the time in Chicago and New York, they're killing us with the regulation, all kinds, whether it's union, government, whatever. And then they come here and they see, just people that just want cities to be growing, to be friendly to business. And I think what you hit is what made me come to Miami 40 years ago. I couldn't shape Chicago and I couldn't shape New York. There are cities that are done. And here, I'm looking over there and all the buildings in South Beach we built, and probably a third of the buildings that you're looking back here. So it's a city that you can...
He didn't have to flex on us that hard. Oh, man. He just said... all the buildings over there, we built those. Third of those buildings we built. Come on, man, to calm down with the flexing. Oh, my gosh.
Old, or at least you can have a large effect in molding. So we are we are very, very strong in everywhere in Florida, because I think what we experienced in Miami is now being experienced by Tampa, St. Petersburg in a very strong way. And I think it's going to move to Jacksonville. We like waterfront areas. You know, I think the water is so important. The one reason to move to here is like you want to open your window and hope, if you can afford it, to be able to look at these wonderful waters that we have, right? So we are these cities that are becoming very serious in the sense that our educational systems and our transportation systems and our cultural systems are improving, but it still has a feeling of a playground, right? I mean, you can go on the weekends and you can have fun. You can have fun with your family. You know, when we were talking about people, because we're talking to a lot of Wall Street firms, large Wall Street firms, coming, to our office buildings, and their young people, particularly the young people, just want to be in Miami. You know, they love the energy, that Miami has, and I think that's happening in St. Pete and Tampa.
Yeah, one interesting thing is my entire career, I've said I will never move to Florida, ever. I will never move to Florida. And so, and St. Petersburg, that was a retirement community, right? There's a saying there, I've forgotten what it was. You go to die or something. I forget, something like that. But anyway, and that was kind of
Look at you now.
Yeah, and that was kind of my conception. And we go to St. Pete, and the vibrancy, the dynamism, the excitement, the friendliness, the welcome we got was pretty astounding. And the other thing, in terms of education, really important to us and to me, started a foundation around education through the lens of innovation, toddler through high school.
I'm so tempted to make a joke about the education system in Florida. I'm not going to do it.
And Pinellas
I went to public school in Arizona, so it's not much better. So.
County, very interested in our pilot tests, which we're going to start doing next fall. So pretty excited about that.
Your expertise is innovation. Mm-hmm. That's what you invest in. That's what you know best. Cities on the coasts and on the Great Lakes dominated the economic development of the 20th century in this country, in part because they were knowledge centers. Mm-hmm. Has technology broken that link? Does business no longer need to be clustered near campuses and the research that goes on there?
So when I first got into the business, I knew I had to be in New York City, the financial center of the world, right? This was in the early 80s. And so I went. But we are moving, and Zach, I'm sure, will attest to this, to, you need communities, sure, and clustering, but I think it's going to be much more possible to run a decentralized organization. Now, most of our employees are moving down here, but we are going to be hybrid. And I think that from a talent retention point of view, that's really important.
Zach, George just talked about the appeal of beachfront property. I'm not sure whether you have beachfront property. Not yet, nope. Anyhow. But coastal Florida is between the twin risks of hurricanes and
Mayor-Dade County with the
a point that you raised, Cathie, about education. Mm-hmm. and
happening everywhere, right? That you either live two hours ahead of our school programs. This building right by the transit station.
This is a very long correction for us.
I know that.
Dude, I was just watching this video and I was like, wait a minute. Do they not even have the part in here that I watched on the clip? I was getting so worried. I'm like, did I just really waste 19 minutes of my time on something? Because I'm like, I don't want to hear this. I thought they were going to talk more about the markets. They keep talking about real estate.
The audience are thinking to themselves, Eric, you've got three such bright financial minds sitting there. Aren't you going to ask them about the markets?
Yeah.
So I am.
There we go, baby.
Cathie,
we're playing with
flagship Ark Innovation ETF, which I referenced
I want to move
earlier,
to Miami.
Had another rough day. It's down 25% in the past month. What is going on? You and I have talked before about the reality and risk of corrections. How much worse could this innovation sell-off get before it gets better?
Well, I think part of what's going on is tax loss selling. That's just a technical factor.
Tax loss harvesting. Oh. What I've been talking about for 2 weeks now. Thank you.
I think that the fear of inflation and interest rates rising, especially after Chairman Powell declared that perhaps inflation is not transitory here, has scared the financial markets. This really started in mid-February, this correction. So this is a very long correction for us. We actually think the bigger risk is deflation by far. I disagree with Barry completely on this, and I look at these rent increases as major tax increases effectively on the lower income earners, and the same thing with gasoline prices. The University of Michigan Consumer Sentiment Index is lower now than it was at the depths of the coronavirus.
I thought that was very interesting, okay? That point she just brought out there, and also the fact that she thinks deflation is more of a risk to the market. And obviously I said on the YouTube channel for a while now, I think in 2022, I think inflation is going to slow massively, and I think we could get even into potentially deflation. But certainly this, craziness in inflation is going to come down in a massive way, in my personal opinion, in 22 as we kind of move throughout the year.
Because purchasing power is diminishing here so much. I also think that businesses that have spent the last year and a half scrambling to catch up with consumption, they were way behind, are now overdoing it. And we are in the middle of a major inventory build that is going to unwind next year. So
that's interesting. I wish you would have dove a little more into the details of that, because what companies is she talking about specifically there that are building up too much inventory? Is she talking about retailers? Is she talking about, Corsair Gaming? Are they ordering too many keyboards and mice, right? What types of companies is she really referring to? That's what I'd be really interested in. Is she talking about Apple's ordering too many MacBooks? Because that's just such a broad statement. It's like, do you mean every single company, or what are we talking about here? Specific sectors?
It will be a cyclical deflation, and then innovation itself is inherently deflationary. We're seeing, just to give one example, artificial intelligence training costs dropping 60% per year, right? And AI is going to permeate every...
No one knows what that means, by the way. No one knows what that means. What? The AI training cost is going out 60%? What? AI, that's supposed to teach itself. What?
Sector, every industry, every company, it's going to become, very competitive. So we think, and that's just symptomatic. There are so many other deflationary forces out there associated with DNA sequencing, robotics, energy storage, blockchain technology. So, and what we're also seeing is the convergence between and among these various innovation platforms, so that one S-curve is going to feed another and another. And so people are saying, well, then why are these stocks going down? The question we used to get is, we're in a bubble, aren't we? I said, we're not in a bubble. And now that our stocks are down, but the averages are up, many people are thinking we're in a bubble still. And we are, and it's called the benchmark stocks, which are going to be disrupted as the traditional world order is disintermediated and in often cases is going to be destroyed by this new world. So you can say I'm talking my book, but those are two massive secular deflationary forces. One is extremely positive. Deflation, learning curves, cost declines, price declines in innovation means we'll get a boom in innovation. The other side of that is there are many companies who, especially since the tech and telecom bust, and then again 08, 09, they've catered to short-term oriented shareholders who are scared. They've been scared ever since 08, 09, and they want their profits now, they want their dividends now. So these companies leveraged up buy back shares, manufacture earnings, and didn't invest enough in innovation, they're going to face a lot of problems. And
Okay, talk about Apple without talking about Apple, okay? No, in all seriousness, I mean, basically what she just described there kind of sounded a little bit like Apple. It's like, whoa, you're ready to take shots there. Oh my gosh, listen to this.
By this new world. So you can say I'm talking my book, but those are two massive secular deflationary forces. One is extremely positive. Deflation, learning curves, cost declines, price declines in innovation means we'll get a boom in innovation. The other side of that is there are many companies who, especially since the tech and telecom bust, and then again 08, 09, they've catered to short-term oriented shareholders who are scared. They've been scared ever since 08, 09, and they want their profits now, they want their dividends now. So these companies leveraged up, buy back shares, manufacture earnings, and didn't invest enough in innovation. They're going to face a lot of problems, and they will face.
I mean, she could be making an argument like Apple and Microsoft are those type of companies with the massive buybacks. We know how much debt Apple has now specifically because they've bought back so many shares on debt essentially. Obviously, they have a crazy cash position as well, but what is it? I think it's $100 billion plus in debt if I recall at Apple, right? Now, not to say they're not innovating at the pace, but it sounds like she's saying a lot of the big dog companies are going to get disrupted, like the Apples, the Microsofts, maybe companies like that. Amazon's really hard to see that one getting disrupted. If anything, I feel like Amazon's still in disruption mode, so I don't think she's talking specifically about them. Maybe she's also talking about the big banks and definitely the banking sector. I wish she would have gone into a little more specifics here, but maybe the banking sector and a lot of the big banks, maybe they're ripe for disruption. We know everybody's trying to kind of slowly morph into that way, right? So I'm just trying to think of other companies she could be kind of talking about there. It seems like those are kind of the first that come to mind when you think about, issuing a lot of debt, buying back a ton of shares, obviously helping the EPS look better.
Bad
dividends,
deflation.
I would love to keep this panel going, but my colleague Nathan Crooks is waiting, so I'm going to ask.
Yeah, and also, I think it started raining back there. That's why you don't want to move to Miami. Move to Vegas. Forget Miami, man.
Last question of George. You heard Barry Sternlicht here earlier say that he has 3% of his net worth in Bitcoin, and he thinks it's something we more or less all should do. Zach here is clearly all in on crypto. Cathie has been a big evangelist.
All in?
For Bitcoin in particular.
Imagine he's like, I don't own any Bitcoin, just to be clear. I just work for a company that has to do with crypto, but I actually don't even believe in it. Imagine if he said that.
But crypto more broadly, as some of you may be aware. George, what about you? You're one of the world's most famous art collectors. Are you buying NFTs?
No, I don't. And it is not, I'm not making a judgment about NFTs.
What kind of question's that, man?
I'm a serial collector.
NFTs out here?
Just in Basel, it was what something is you buy 10 pieces and I will get 46 pieces of art. Because I want this museum to be a great museum. So all my collection is going to be coming here. I don't understand, the new art, so let me give you an example. We have a guy that we invest in his company. I'm not even going to mention, you'll probably know once I tell you this. And he doodles with his kids and he had some doodling pages, and somebody said, why don't you just put it at Christie's or Sotheby's or whatever it was? And he made a joke and he says, I'm going to put it in. They wouldn't give him an estimate, but they would still put it in. They sold the 3 doodles. He's not an artist. He's never drawn, for $400,000 each.
What?
So I don't understand.
That sounds like a case of the rich get richer. What in the world?
And this, I don't understand how, and then, for going from there, and he's a big, advocate of, to have an image that you're buying that is in your cell phone that anybody actually can replicate, except that they give you certain rights and so forth, to me is, maybe I'm just really old, it's not for me. I don't see it. I see it as a moment in time. Everybody's jumping in. There's immense amounts of money, like Barry's saying, chasing everything right now. So it's not NFTs. The art world is crazy. Their favorite.
I see it kind of something in between what this gentleman's, I see kind of NFTs and that whole movement as, I think it's something that is going to be around likely long term. And I think it's going to change the game when it comes to not just art, but potentially other industries as well. But I do think, there's something wrong with the pricing of things, right? When something's being priced at some outrageous price, that's where things get real fishy, real fast, right? So I may be a happy medium between this guy and maybe somebody that's super bullish on NFTs.
Artists that were a year ago were $20,000 for a piece of art. They're still in school, and now they're coming up, and they go up to $200,000-$300,000. So the amount of money that is chasing things, whether it's real estate or art, it's to me, it's just insane. And I don't know when it stops and how it stops, how it moves.
Cathie wants to say something.
Yeah, there are two things. One, that would seem inconsistent with what I said about inflation, but it's not, because inflation is about goods and services, and what we're seeing there is the velocity of money coming down. It started in 08, 09, but on NFTs, it's the greatest thing to happen to artists. It really is,
I think velocity of money is going to be very interesting to watch in 22. I wouldn't be surprised at all if it actually picks up. We'll see. It's kind of been on just a downward trajectory for a long time now. It's going to be interesting to watch 22.
Company called Async Art. When I first heard this, it was like an aha moment for me. This is really going to, stimulate and cause some profound changes in the creator world. But artists, even with physical art, turning it into digital. NFTs, this is a property rights system. It's a very interesting phenomenon because we are moving into the digital world.
And I understand that. And let me tell you, as an old timer and a lover of art and a passionate lover of art, I hope people don't lose coming to museums and experiencing the beauty of art on a personal basis. When I had to buy art by phone, in my apps, and then now I finally get to come to look at museums, and you look at great pieces of art, there is nothing like it. So yes, I can understand how we will create new energies but the beauty of art is always the personal experience of watching the art.
So we have an art gallery with Signum. It's called Signum Ark Gallery, and it's all NFTs, digital art, and it is a thing of beauty as well.
Is it just
truly
sitting
is.
really close
maybe
together?
We can walk through the gallery.
The art gallery of the future could be in the metaverse.
Decentralized.
We're wrapping up, but I don't want to be unfair to our friend Zach here. Zach, 30 seconds. NFTs, go.
Yeah, look, it's the first non-currency application of crypto, so there are going to be many more.
30 seconds. Explain to the world what NFTs are.
That's good. It gives people a way to monetize their work. That's good. And I think there's going to be a really interesting nexus between physical space and NFTs in the near future. That's key. Museums are not going away. I think it empowers museums as well.
Absolutely.
So it's good for everybody.
Yes.
Beautifully
Win-win.
succinct. A wonderful way to end our panel. Ladies and gentlemen, please join me in thanking Cathie Wood, George.
Yeah, so I mean, obviously Cathie Wood there, she didn't really call a bottom in her stocks. That was an interesting thing. It's not like she's like, hey, in 3 months, we're going to bottom, or 6 months, or a month. She definitely didn't put her head out there like that, and he asked her, about the kind of the markets in general. So she kind of laid back a bit. But she clearly believes that there's massive disruption that's going to come to, I mean, at the end of the day, it sounded like she was referencing companies like Apple, Microsoft, a lot of the big banks and whatnot, because she's basically saying, these companies that have leveraged up their balance sheets to buy back shares, to artificially inflate earnings, haven't been investing enough in innovation in their companies, but instead of to dividends, share buybacks. Look at how much money Apple spent on share buybacks and dividends. Now, Apple will make the case, and obviously Tim Cook will say, hey, man, we're doing plenty of innovation. We're spending this much money in R&D and things like that. But at the end of the day, you're going to say, well, they could be spending a whole lot more, but instead they're spending obviously fortunes on dividends and share buybacks. Microsoft could probably say the same, right? And you look at a company like Amazon on the flip side, right? And they're just not really into any of that. They're just like, we're going to spend on the business of business of business. And they're, I was just looking into recently how much they've grown their fleet of vehicles for transportation. It's off the charts. Like, there's a possibility they could get as many planes and trucks as UPS and FedEx has within a decade, which is crazy to even think about, because how long how long like FedEx and UPS have been doing delivery, right? And the fact that Amazon could get to this point within, basically within 15 years since they started their business, right? Because they started kind of getting serious about transportation about 5 years ago. And within a decade, they could have this business as large as companies like UPS and FedEx. Like, that's just crazy to think about, right? And so that's company kind of on the flip side, right? So yeah, it seems like she's definitely kind of predicting the downfall of a lot of these big, huge companies that aren't spending enough on innovation. And, Apple's definitely a company that they're going to have a big moment for them over the next 5 years. You're hearing a lot of talk about metaverse, right? Metaverse is going to become a real thing over the next 5 years. And that is something that could definitely disrupt the iPhone, definitely tablets, even laptops, computers, things like that over time. And when you're talking about augmented reality, virtual reality, you're talking about new form factors like, glasses, let's say you put on that you can, control different things in your own kind of like little world where you're in reality in terms of like, reality space, but you can also, control things. There's no doubt look, companies like that, we're going to really get to see how much they've invested in innovation over the next 5 years. Companies like Microsoft, same exact thing, right? We're going to really get to see the truth over the next 5 years, what those companies have really been doing, because those sorts of companies are going to either, thrive and make it to the other side, or they will be disrupted in this decade, right? Where all of a sudden we're like, oh, wow, Apple's not as relevant as it once was. Like, people don't have the need to go get an iPhone in 2030. Instead, they're getting some other device, right, for communication. And so, I think Facebook and Apple are at war, essentially. I know a lot of people in the space, and I can tell you they're at war. I'll just leave it there. And so, I think it's just something that's going to continue to go on, and we'll get to see who's really spending the money in the right ways on their R&D and who's not, right? Obviously, Cathie Wood believes the company she's invested in are the premier players in the spaces they compete. So obviously, she feels like that with Tesla and the EV market, energy market, and everything else Tesla's trying to do. She feels like that with a company like Teladoc, companies like Zoom, and many others that she's in, right? She feels like those companies are the disruptors over the next decade or two. And these kind of older school companies, she calls them, kind of the ones that hold the benchmarks up, they're the ones that are ripe for disruption over the next decade. And that could signal a top for a lot of these companies, but in terms of she really didn't want to get into the short term, and I could kind of understand that, because then you're kind of putting your head out there and you're like, I think we're going to see a bottom in my type of stocks in the next 3 months, because then if 3 months go by and it's not the bottom, then you're like, oh gosh, and I don't think she wants to play that game. When her fund's been devastated this year, let's be quite honest. And all that money came into the fund, right? All that money came into Cathie Wood's fund right when all these stocks were basically right around peaking, and she was flushing all that money into a lot of these stocks. Teladoc went up to $308, right? Today, I think it's $100 or under $100 a share, and that's their second biggest position. And then those stocks have just come down and down and down and down and down, just got devastated. She did specifically, what was the first thing she brought up? Tax loss harvesting. That's something I've been talking about. It's become a joke on my channel now, in terms of like, take a shot every time Jeremy mentions tax loss harvesting, and I've been talking about it for 2-3 weeks now. I think it's going on in a massive way, more than I've ever seen it in my 12-13 years of being in the stock market. And it's one of those things, you can't prove it for sure. It's not like I can hack everybody's brokerage account and be like, this is all this tax loss harvesting. You can never prove it, right? I just feel like I have a pretty good insight on what's going on, and better than 99.99999% of people out there in general, right? Other than if I could somehow have all the data for all the brokerages or something like that, which would probably be illegal. Outside of that, I think I have a pretty good context of what's going on in the market when it comes to things like tax loss harvesting and what folks are looking at when it comes to all these stocks being devastated. She made sure she mentioned that. And when these stocks go down more and more and more, you have more and more of that happen, right? And so I think that's very, very important to understand. As far as me, obviously you guys know where I stand. I'm a buyer of the companies that have been devastated. I think those companies are set up to thrive in 22 and beyond, and I'm willing to invest, every dollar I have into those sorts of companies that I believe, immensely over the next 5+ years. Inflation, deflation talk, all this talk, it's what's the talk right now, okay? 3 years from now, 5 years from now, 7 years from now, no one's going to care about the inflation deflation talk we're talking about in December of 2021. It's going to be long gone. It's the way this goes. The market always goes through cycles where, it gets real caught up into a thing, and that thing is what's talked about, and then boom, all of a sudden, 6 months go by, 12 months go by, and no one talks about it anymore. And so they'll be long gone after 2022, and then it'll be on to the next thing, and the next thing, and that's just the way this kind of game rolls, okay? So anyways, guys, much love as always. Hope you appreciate me kind of doing this video. It was fun to just watch that video together. I got a little scared there for a moment. I didn't think I pulled up the right video. I was like, seriously, man? Because I didn't watch it before. I only saw that little clip. So anyways, guys, and let me know your opinion on this. We'd love to hear from you as always. Don't forget to take advantage of that MOOMOO deal. 5 free stocks valued up to $3,500 each. It'll be pinned comment down there. And peace.